Good morning. It is Wednesday morning, April 8th, 2015. We're going to start out by looking at the SPY here right now. So as you can see here, we have on a little bit longer time frame, these top and bottom lines here represent the monthly, and then obviously we have this week. So we actually have an inside month and an inside week, give or take a few cents here in the SPY, and you can see clearly the 50 simple period moving average and the 20 period exponential not quite crossing to the downside, but absolutely consolidating. So what's the point here? This actually coincides perfectly with the blog post that we put out yesterday. Volatility is contracting. The VIX is practically down at 10 in that area, which means there is not a lot of volatility. Average true range is getting smaller, which leads to a technical setup, or let's just call it a trading cycle that you absolutely need to know. Volatility leads to contraction, contraction leads to volatility. So what we need to be aware of here, and where a lot of traders are getting their head handed to them, is you cannot be aggressive in this environment unless you have an individual stock that's breaking out to new levels, or you have a very, very good reason to justify it. The market is consolidating, and it's frustrating a lot of traders right now, and you have to pay attention. Interestingly, we put a post out there yesterday. What is one of the most frustrating things for you in trading? And almost, I would say probably 75% of the people said patience. Why is patience a problem? Patience should not be a problem. You can't force money out of the market if it's not there. When you make more, you have to save more, and when it is tough, you have to consolidate. It's not that difficult to make money when things are obvious. The key is not over trading and throwing money away when there's little to nothing to do. Yes, I understand the market opens. It's open from 9:30 to 4, but that's not a bell that says ding, 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 you have to do something. I can't stress this enough. If you want to have any chance of succeeding as a trader in the long term, you must recognize market conditions and adapt your expectations, meaning how long you plan on being in the trade, how aggressive you plan on being in the trade, to what's available. You can't trade what's not there. You don't want to throw money away just because the market's open and just because you feel like, quote unquote, you need to make money. If you have to force trades to make money, you will end up getting chopped to death. It'll feel like a hundred little paper cuts, and you won't know where your money went. So I can't stress that enough. So in the market, the general market right now, we're consolidating, and the VIX is right around a level right now that is screaming at you there's not a lot going on. Now, that doesn't mean there's nothing to do. It just means that your expectations for follow-through and taking profits at or near regular ATR levels for whatever that stock is, average true range, makes sense right now. You should be booking profits and or trading around positions in order to, let me zoom that out, in order to not be giving back profits if you add to a position that doesn't have a higher expectation for follow-through. So we're going to quickly go through some longer-term charts here just so you understand what we have. We have a weekly and we have a daily. The weekly, we're just going to use old school trend lines and candlesticks. I find it's a great way to be involved with the market. And then we have a 20 and a 50 here. We actually mentioned this yesterday. We were discussing CVX in the video. Clearly a long-term downtrend, and even if we go out a little further, you can see it's almost a year. Practically anybody who drives knows what's going on with oil right now. If you're a trader, you absolutely should. We had discussed the possibility of this cracking and breaking through for two reasons. We actually saw some decent volume on the up days here. We had an ascending wedge here, and we actually did end up getting a breakout. Now, that doesn't mean it's a long. Okay, I can't stress this enough. This is a potential change of bottom in a much, much longer term downtrend. Okay, if you want to trade and build a longer position, maybe you nibble with the stop loss down here at basically 100, but it's not a long. Okay, I can't stress that enough. It's not a high probability long unless you're day trading and going down to the intraday time frame yesterday and maybe trading momentum intraday because it was a fairly decent green candle with roughly a $2 trading range, maybe even a little more than that, about $2.50. I hope you understand that. It's not a long on the higher time frames. You're guessing if it's going to continue. You have a powerful move to the downside that still needs to be worked out, and one day is not going to change that. The only way it would be a long is if you were day trading, dropping down to the intraday time frames and looking for a trade there. So this is a watch, but it's not a long. Boeing we discussed again yesterday too. We kind of like this one. It was pretty decent reversal yesterday and a really solid uptrend. The only downside to the Boeing is the clear resistance. We actually did talk about this resistance at 153 yesterday, and we said if it clears 153, that would be the area to look to take a profit. And if it did push through and give us a flag up there, 156 would be the area. That's pretty much still holding through. The only problem is we got rejected at 153, exactly where we expected. So kind of a limited advantage here, or edge. If I'm working with you guys in the mentor room, this is exactly what I'd be doing in Boeing right now. I would say right now 146 to 153, let's call it, maybe a little bit higher than that, straighten that line out. There's zero edge in there right now until it breaks out of that range. So good game planning is you set alarms around that trading range. I have plenty of people who always come to me and say, well, what if I just trade the range? What if I short sell 153.75 and look to bid it back around 146? Yeah, you can do that, but you better have your fast acting fingers on the keys ready to go if it breaks out. Because if and when it does break out of an obvious range, if you get caught on the wrong side, you have to have the discipline to say my stop loss is just past that 153 level, and if it breaks out, I'm not going to second guess, especially because you have an existing really solid uptrend. My opinion would be to wait for something better that has some room. If you decide to trade in this range right now, which again, preceding uptrend, you would expect it to break out to the upside. Expect it to. Nothing set in stone. You would expect it to break out to the upside. But that's the whole point in game planning. You set all of these scenarios up. Not much going on right now because it did exactly what it was supposed to do for 2 days. We got a rally off of the low. We hit the resistance, and now we're in this range. So you make a decision. Is that the best place for me to allocate money right now? Well, let's continue and find out. Johnson & Johnson, J&J. Zoom out a little bit further. Interestingly, it's a complete mess on the daily chart. Clearly a downtrend with the 20 below the 50. Short term over the last couple of months, clearly see a downtrend. Now here's the interesting thing here. We keep getting rejected. Look at all these indecision candles. A lot of indecision, smaller bodies, right? That's what we call them in my vernacular. But look what we have going on here. We have a pretty decent, well, I shouldn't say decent. It's definitely a topping pattern. One shoulder, two shoulders, and a much higher shoulder. I guess you can call that scoliosis. But then if you jump out to another one, you have one shoulder, the head, and another shoulder. So the point that I'm trying to get across here is we essentially have a head and shoulders top pattern. Every time we get below this 98, 99 level, price holds support. We had 1, 2, 3, 4, 5, 6 times J&J has hit this level, but we do have this big topping pattern. So would not be shocked if J&J broke through. So the moving averages are pointing to the downside. Prices below the moving averages are getting a lot of indecision. This is the line in the sand. If I'm trading this stock right now, although it had a bounce yesterday, it rejected both moving averages, and I would absolutely have an alarm at this 99 level, maybe a little bit below that, 98.50. Look at you got some room to go here. You're talking about 86 if it does push through that level to the downside. I like J&J. There's not a lot of obvious institutional order flow here from going all the way back to here. Really, once it bounced up and pulled back, we're kind of in a trading range. So essentially from end of last year, end of 2014 heading into now. I'm sorry, that's not the end. That's January 2014. So we have roughly a year there where it's just bouncing around. I like this on the short side, quite honestly. I would not be bidding this. Again, could you be trading this trading range? Yeah, absolutely could be. But again, is that the best idea? Why isn't this working? Is that the best idea to look for an opportunity? Trading ranges, you have to decide trading ranges are your business. I mean, that's really it. I've seen this happen so many times. Well, now I'm going to shift into be a momentum trader. Now I'm going to shift into be a trend trader. Now I'm going to shift into being a counter trend trader. Don't do that. It's the fastest way to lose money. It's very, very difficult to end up shifting and changing your entire business just to adapt to market conditions. When I'm saying adjust your expectations, I'm not telling you to change your strategy. There's a giant difference between the two. So again, if I'm game planning the stock, I'm looking for a sell short below 98.70. I'm not getting involved in this mess. I want to know if something significant happens, I want to be involved. And right now, it's significant that it keeps hitting this price level. 3M, nothing changed from our game plan from yesterday. Pretty much a trading range. Again, this big box here is the same one that we're looking at down here, maybe a little bit higher up in that level. If I had a choice, I would rather be long. This is a pretty solid move to the upside. A very, very tight flag. Not a tight, actually, I'm sorry. It's a very good flag in that the fact that it's a consolidation, but it's not tight. The tighter the flag, kind of like that one, where there's not a lot of price action there, the more likely you're going to get follow through. So again, we got a couple of times we bounced up to this 169.50, 170 level and got rejected. So again, a lot of these. Think about what we just said. We started out with the market. We consolidated, showing the overall bigger tape, consolidating in the SPY. Again, S&P 500 representing 500 stocks. Consolidation is rampant right now around almost everything that we're looking at. ExxonMobil, a little bit different picture than CVX. This one actually did not break out. So what does that mean? Relative weakness continuing in a downtrend. So we got a bear flag here on the weekly chart. Let's draw that out. Which you would anticipate support. Let's see where the next level is. Okay, actually interesting looking at zooming out multiple time frames, even a little further here. Bear flag below what was support. You would expect follow through. That's actually a pretty clean technical pattern there if you get a bear flag. So we're consolidating below what was support, should be resistance. Now I would look for this to continue to the downside. Visa, let's zoom out a little bit. So tough to trade these parabolic moves and find a good spot to manage risk. 20 just crossed below the 50, the 50 sideways. This is kind of neutral right now. If I had a choice, I'd rather be long. I don't see a potential change of trend other than the fact that we could possibly be looking at a head and shoulders top here. We'd still need to wait for the other top to form here. But if I had gun to my head, I would rather be long. JP Morgan, zero edge right now. Look at that chart right now. Can you clearly say to yourself, absolutely buyers are in charge or absolutely sellers are in charge? Yeah, definitely price is going higher, but there's not a chance in the world you could look at that and say, wow, I see a great opportunity there because of X, Y, and Z. That's a tough trade right there. Goldman Sachs, we've been talking about very clearly. We thought we had a little head and shoulders top here. We did not. We ended up holding support, pushing to new highs. And again, this 195 level is where we keep getting rejected. It's a number that you have to pay attention to. The better trade would be if we push through there, and this time we stay. This time we did not over here a couple of months ago. If we push above here, stay on any kind of volume, yes. There is no trade prior to that. I can't stress that enough. And actually, I believe that we put that in there from yeah, there you go. So see how significant that level is? If it clears that level, you got a lot of room, but it's got to clear that level. The charts don't lie. Support and resistance, keep it simple. Where's the last place buyers or sellers did something significant? And this is the level there. Going out to Merck, not really an edge there. I can't see it. Can you see an edge? I mean, other than the fact that we have an inside week and a possible trade out of an inside week, sort of a breakout style trade, which is a trading pattern, an inside week, inside day. Linda Raschke used to call it NR7. Narrowest range of the last 7 days. It is a pattern. You could trade the volatility out of that, but again, look at this time frame. You cannot tell me buyers or sellers are definitely in charge of that stock. You're taking a guess. You don't want to guess. If you lose money, you want losing money to be on great ideas. All right, Intel, again, very, very, very clean setup. That looks like a lot of what we're looking at on a lot of other charts, which is essentially head and shoulders tops forming. We're looking at a lot of these right shoulders potentially forming. 20 is clearly below the 50 here. So short term, again, short term looking quarter to quarter, we're in a downtrend. We are in a downtrend right now. So it looks like this downtrend and the 50 simple moving average are probably around the same level. So if I was looking to do anything, I'd probably look for this stock to bounce around the 32.75 area and look for a sell short in that area. Cisco, same thing, very similar chart. 50 period, flat, 20 below the 50, multi-day consolidation again. There's no edge here, guys. You got to allocate money when there's something obvious to do. Inside week in McDonald's, pretty close to an inside day over here as well. So again, what does that mean for a trade? It means that you are now in breakout mode. Same way when you have an expansion in volatility, you would expect consolidation. We have inside day, inside week. Look for a breakout. Ooh, good example here. Clearly an uptrend here in Pfizer. Look at these indecision. We have 1, 2, 3, 4, 5, 6, 7, 8 candles in a row of indecision. Indecision, doji, whatever you want to call it. There's a lot of different ways of explaining it. But really, in my world, indecision is when it opens and closes near the same area. That's exactly what's going on here in Pfizer. Indecision leads to a contraction. Contraction in volatility leads to an expansion in volatility. Let these stocks tip their hand. This is actually a really great lesson in just looking at pure price action and setting your expectations. A lot of stocks are consolidating right now. If and when they break out of the consolidation, we have more to do, and then we can end up holding stocks longer. IBM continuing to hold the down move. Everything is sideways there, not much to do. Microsoft, great example of the trading range we drew the other day, not looking to go anywhere until we break out of that range. Could you buy the 40-20 support? Absolutely. Is it the best idea you have on the table? That's the question. All right, cool setup here in Nike. 1, 2, 3 weeks in a row of consolidation. Cannot stress this enough. This would absolutely be on my game plan today. You know why? When this breaks out of a 3-week consolidation, you will probably get one of these types of weeks. You cannot miss those types of weeks. Contraction leads to volatility. Volatility leads to contraction. Tremendous setup here in Nike. 3 weeks worth of price action, and also yesterday. Awesome. Let's see. Coke, KO, not much going on there. Another inside day. Moving averages are aligned to look for a short sale. Clearly short sale over the last few months. GE, can't say I love anything there. Disney, ooh, that's kind of interesting there too. A lot of indecision. Again, I'm just looking how fast you can eyeball that now when you see that. You see those small bodies? That's indecision. So if all that money is undecided, what would make you want to do something? That's a great way to word it. If all that money is undecided, what would make you want to be aggressive? All right, so we got, again, 1, 2 weeks in a row of consolidation. This would be on my list to look for a breakout. Breakout, you expect a trend type day. DuPont, pretty decent short-term follow-through on this gap down with good volume. I would actually be looking for DuPont to follow through. It looks like 70.50 is the support level it would need to get through. We held that on Monday. Tuesday we reversed, ended up getting a shooting star. I would look for follow-through on DuPont to the downside. Boy, you really can't trade against this. This is solid. You can guess that you think it's turning around, but how do you trade against that, man? I know we had somebody in the Facebook group the other day quote about buying out of the money puts as it was trading higher into this. I actually don't think that was the worst idea. You probably got the puts at a really good price, meaning that as price was rising, the price of the puts got cheaper. So not a bad trade. Not obviously not the best trade in the world, but you could also be doing that same thing for securing profits on a existing long instead of using a stop loss, so you give yourself a little more wiggle room if you expect prices to move higher. So this is a long. It's really just a question of where. If it sells off, it sells off. It's not a short. Verizon, not a lot to do there. United Technologies, again, I hope you're recognizing this now. 2 weeks in a row, inside candles. 20 below the 50 on the daily. I'm not going to go out of my way and say this is a downtrend. It's not. The 50 is practically still pointing up. Maybe a little bit down here at 20. So short-term downtrend, longer-term neutral to up. Nothing to do there. Again, not obvious. Walmart, I would be looking for some follow-through to the downside. Clearly, over the last 3 or 4 months, clearly selling pressure. Clearly peeking its head below this 80 level. And I'd be looking for follow-through. Moving averages are both pointing down. I would be looking for that on the short side. 2 inside weeks in a row. Again, I really hope that you're starting to recognize contraction in volatility. Indecision means you wait for a breakout. Home Depot is a really, really solid. Actually, we draw this a little bit wider for the longer-term trend. Again, classic technical analysis. You do not want to go through other price points. Again, read that book by Trader Vic. It's easily one of the best books to learn. The first book. Second book was a little rambling. The first book was awesome. Learn how to draw trend lines. It keeps you in touch with price action. So this would be the first area of support. So maybe this goes sideways a little bit before we look for another long. If it breaks that, this would be the first target. Maybe get a potential change of trend up there. But again, 2 inside candles in a row in the weekly chart. This is a weekly chart. I don't know if you can see that in the video, as well as indecision. So looking for a breakout there in Home Depot. Still like it on the long side. P&G setting up nicely again on the short side. The window that we are trading in, this is a short sale. Just a question of when. All right, travelers. Wow, how much more are we repeating this? Just looking at the spiders and breaking it out 2 weeks in a row inside. Moving averages are very neutral. I don't see anything to do there. Caterpillar, let's zoom out here. I believe we drew this because it was a pretty significant level. Yep, there you go. Going back a couple of years, we're seeing a flag below support. That is a pretty solid short sale setup. And look at how nicely it came into that level there. American Express, zoom out a little bit. Clearly a shorter term downtrend over the last few months, definitely for this year so far. Moving averages are confirming that. I'd rather be short than long here, clearly. And last but not least, Apple. I actually had Apple as a pretty good technical setup coming into this week. You can clearly see a nice push to the upside, nice flag. Moving average on the 50 was going higher. It looks like the 50 is going to kiss the 20 and then bounce. Sells off yesterday. We actually get a downgrade this morning. I can't stress this enough. It doesn't make it a bad idea. Technically, it was a good setup. If it doesn't follow through, it doesn't follow through. Not a big deal. All right. Hope that's a pretty good, solid game plan for you. At least just generally spitballing the charts in the Dow, and more importantly, not really to call out the trades, but to get your mind thinking about how to set up the trades. Risk money on great ideas. I can't stress that enough.